Hi, this is Bryce Knorr from Farm Futures with a special edition of The Buzz, coming to you from St. Louis, where the Farm Futures Business Summit got underway today. Talking a lot about marketings, and as usual, we released our updated production estimates for 2014 corn and soybeans first thing this morning. For corn, we have one of the lowest production estimates among trade guesses at under 14.2 billion bushels. We see harvested acres falling more than 1 million. Yields also a little bit softer. So we see production well under USDA's last forecast. The same holds true for soybeans, where we're 3.844 billion bushels. Again, we see a reduction in harvested acres, even bigger than the one for corn due to more abandonment, about 1.3 million acres less. Also, yields a little bit softer as well. That estimate is by far the lowest in the trade as well. Now, looking forward to ending stocks, that's another number we'll get on January 12th from USDA. We see corn ending stocks down almost 300 million bushels, all the way to 1.71 billion bushels. That's down significantly. Still a lot of corn, however. For soybeans, we're down at 375 million. That's down 30 million from last month. If our production estimate is as small as, and USDA finds that, the carryout could be even less. For wheat, we carryout heading in the other direction, up almost to 700 million bushels. Again, wheat demand remaining very weak. Bob, once again, we seem to be at odds with the rest of the industry. How are the other average trade guesses? What are they looking like?
Well, right now, as far as production, they're looking at 14.3 on the corn. Yield, they're keeping pretty much unchanged at 173.4. Beans are coming in at 3.96. That's just up a little bit. Yields are 47.7, up just a margin. As far as the ending stocks, we're looking for a bit of a reduction from the previous USDA estimate of 19.44 for corn. Beans 401, that's down a little bit. Wheat 667, that's up a small amount from the 654 USDA had before.
So the other report, or the two of them, the USDA puts out next week. We'll also get the December 1st stocks report for corn, soybeans, and wheat. Oddly enough, my estimates are right in line with the average trade guess, so don't know exactly what some of these other fellows are thinking at this point. But USDA also puts out its first survey of winter wheat estimates. We did ours, of course, way back in August. We did our second survey here recently. We're looking for seedings, winter wheat, about 42.6 million bushels, and for all wheat seedings, above 57 million. We think spring wheat acres look like they're going to be up, and also farmers interested in planting a lot of durum on the northern plains. Probably the biggest factor for the winter wheat seedings is a pretty big reduction in soft red winter wheat acres. A lot of wheat either didn't get planted due to the slow harvest in the eastern corn belt, or didn't germinate, and we think that could perhaps help support the soft red winter wheat prices. Now, we did see sharp reduction in winter wheat ratings, particularly for soft red winter wheat in December ratings that are put out by some key states, including Illinois. Bob, it's going to be awfully cold on Thursday morning. What's the weather looking like?
You're right, it's going to be cold. They're talking temperatures -5 to -15 below. That's tonight, Thursday morning, and then they got another cold spell coming in on Friday. But I might add, you had made reference to the lower soft red winter wheat acreage. The coldest areas will be in the soft red winter wheat, at least that's the forecast. Hard red winter wheat should be okay. But right now the attention is on Illinois and that whole Midwest soft red winter wheat production region. They've had some snow, but right now forecasters are saying up to 2/3 of that crop could be in jeopardy.
And how about around the world? We saw at least some buying to start the week in soybeans based on some ideas that maybe South America wasn't getting enough precipitation.
I think the concern there is mainly on the coastal regions in Brazil. They're a little light on rain there. Nothing serious, but they are having a dry spell there. Mato Grosso is fine. Other regions are pretty much okay. As we know, Argentina's had some excessive rains, but it's really too early to say what the issue is there. That is delaying a little wheat harvest down there in Argentina, but not a big concern, and that's primarily it as far as Brazil. We'll have to wait and see on that coastal region in Brazil.
Well, the other big thing happening, of course, around the world is extremely volatile outside markets, particularly crude oil and the dollar. The dollar rallied to its highest level since 2005 this week. Crude oil still headed in the other direction, traded below $47 for the first time since 2009. Looks like that could start to have an impact on ethanol margins as well. Also, there always seems to be concern when the dollar's stronger about exports. Bob, do you think that strong dollar is having any impact on our agricultural markets?
I would have to think so. I mean, history shows that it's not a big deal, but it is getting at a level now that it is a part of the discussion. You've already, particularly in wheat, you already have wheat not really competitive with the Black Sea region and other origins. So I can't imagine this is going to make it any easier. Plus, you know, as you know, our freight rate is quite a bit higher than say, out of the Black Sea or out of Europe. So the strong dollars could just complicate that.
Yeah, certainly the weak euro and that collapsing ruble make that European and Black Sea wheat even more competitive into those lucrative North Africa and Middle Eastern markets. Well, that's all for this edition of The Buzz. We'll be back in our home bases, that's Chicago and Kansas City area, when we come to you after USDA's big reports on January 12th.